Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, June 24th. It's Alissa Coram here, and the bulls are running full speed ahead amid cooling Mid-East tensions. And here with me now to discuss the day's market action and some stocks for our radar is my colleague Justin Nielsen. Justin, what are we going to be taking a look today? I'm so excited. My words are getting scrambled. The market
Yeah.
looks so good here.
Yeah. And look, there's still stocks that were looking good today. So we'll cover a couple of those, including Axon, Shopify, and Booking.
All right, we'll take a look at those stocks. But first, let's take a closer look at the major indexes today. Strong gains across the board here. The NASDAQ Composite up 1.4%. The Russell 2000 also up about 1.4% on the day. The S&P 500 up 1.1%, and the Dow up 1.2%. And if you're looking at key levels for especially the NASDAQ and the S&P 500, the NASDAQ closing in on 20,000 wouldn't take much to get to prior all-time highs. And Justin, same for the S&P 500. After closing back above 6,000 in yesterday's session, we are just a stone's throw away from all-time highs.
Yeah, you don't even have to do a big throw. I mean, I think you might be able to do a stone flick or something, because yeah, the market has been so strong. And again, this is one of those things that remember, just in April, how much there was the wringing of hands and like how bad things could be. And look, if you were looking at the headlines and looking at potential recession and what happens with tariffs and all that, there were plenty of reasons to stay away during that time, but you have to use those charts to tell you when to get back in. And that's why that April 22nd follow-through day that we had was a great time to at least start buying. And look, I'll be honest, I was not going in full bore myself, but as we kept on checking off those boxes, it kept on drawing me in. As more stocks were looking good, it kept drawing me in. And then we got a power trend. We got successful tests of the 21-day moving average line. And now here we are close to new highs. So that's the way you kind of, avoid thinking about it too much and all the reasons why things can go bad, and start leaning into bullish action when you see it, with an eye still on your risk management. Because while it's true that this time it worked well and everything was pretty rosy, it could have gone the other way. We've seen plenty of follow through days that don't work. And if you don't have risk management in place, you can get massacred because you're like, I had a great day. I've got to lean in. You got to know when to kind of bob and weave with the punches.
Absolutely. And that's why we love making incremental decisions as we were checking off those boxes, right? On
Exactly.
the way up, going in incrementally, adding incrementally. And speaking of, when we've had this pullback over the last week or so, looking at that 21-day line, something that is key for active traders that our very own Mike Webster popularized. I think that was a setup day that we saw to kick off the week, right? We were saying how much bullish action we were seeing underneath the surface, but also the fact that we got support right at the 21-day, outside day, upside reversal. That really teed us up for pressing on the gas. And I think active investors who really were paying attention to that action on Monday and today's open probably took that opportunity to get aggressive, Justin.
Yeah, we had a few things that were going for us. First of all, so many headlines that could have taken the market down weren't. The
Yeah.
market was just really kind of shaking off bad news. Looking back at the intraday chart, we can look at the 5-minute chart again. We went over this a little bit yesterday. We had that test, one final shakeout. It lasted about 2 minutes, and then we were kind of off to the races. One more pullback before it really kind of took off. And we had an element of that today. We had a nice gap up, and look, gap ups are sometimes scary because you do get
Mhm.
pullbacks. We got a pullback right to basically the open of the day, the lows of the day, and then again it was just strength from there. So we never went negative, so we didn't even fill in the gap. It was just kind of hovering right around the lows of the day, but a lot of strength. And yesterday we were talking about, okay, it was a good looking day, a great looking setup, upside reversal, as you said, all of those things that were going for us support, but you kind of need the follow up, right? That gives you your checkbox that yes, you know what, that was indeed a strong place to be entering. And look, if it had gone below the lows of yesterday, that would have given us information as well. All of our risk management rules would have kicked in, but we went the other way. And so that kind of just tells you, okay, time to lean bullish. And even more so now, the one thing that you have to be careful of is, hey, these were some strong days here. So you could quickly see things getting extended. And so you
Mhm.
have to be careful not to chase things too much. That's why it's kind of important to lean in when you see those setups. If you're a position trader and you're doing a little bit more slower trading, you've got some room. But the faster trading you do, the more you have to be precise with your entries because you're usually tighter with your stops. So it's a give and take. If you're going to be tighter with your stops, you have to be more precise with your entries. If you're going to be a little looser with your stops, you're going to get bigger drawdowns, but you can give your entries a little bit more room. But it's again a give and take. It's
Yeah.
there's no one way to do this.
Yeah, and I think that that point that you're making really should be emphasized with, we're not just talking about on a day of strength getting aggressive, buying any stock at any place,
Right.
right? Or what's up the most today? Let me go all in on that. Really looking at those chart setups, looking at the technicals, those proper buy areas. Okay, which stocks have paused, digested the last couple of weeks of action and are presenting strong entries, and how can I manage my risk from there versus something that's sticking straight up, doubled over the last month or two and hasn't stopped at all. That
Mhm.
just opens you up to a lot more risk of a pullback.
Mhm. And, there's also this element of letting your portfolio kind of make some decisions for you as well. We went over Dollar General yesterday, and I liked the look of it. It had a good setup, ticker symbol DG. But this morning, gosh, with everything looking so strong, this did not have the follow-up that we
Yeah,
were
right.
expecting. And so that gives you feedback. So if you had bought DG yesterday, maybe it, got tossed today in favor of something that looked stronger.
Mhm.
Or you were saying, okay, I got support right around the level of my stop, so I can give it another day or so. But again, it's you're letting your portfolio really kind of help dictate what you put your money towards and what you take it out of to free that money up for something better.
Yeah, great portfolio management notes there, Justin. What do you want to look at next on the index level?
Well, let's take a look at iBit. This is something that you and I both own, and we've been talking about that again. Support at a moving average line. In this case, iBit was struggling a little bit on around that 21-day moving average line, but yesterday we got that support right at the 50-day moving average line. So another good example of hey, support, upside reversal, and a follow up today. I would have liked to see it cross Friday's high, but we got pretty close. We're right there at the
Mhm.
10-day moving average line. There's still a week left here, so I'll see what happens there, but I still do hold a position on that one.
As
I
do
think we
I.
both got in on the same day, getting in as it was crossing its 50-day moving average line. So when you've got a little bit of room on things, it
Mhm.
does help when you've got that cushion.
Yeah, I love pullbacks to support at the 50-day line, upside reversal. This was something even that we were talking about early on Monday's IBD live show as that test of support was in progress. We were saying, hey, if maybe if you missed the opportunity around the follow through day, or if you just want to add here, could be a good spot to initiate or add. Like you said, we'll have to see how the rest of the week unfolds, but so far, so good for IBIT. What
Yeah.
next?
Probably makes sense to also just take a quick look at the small caps before we get too deep into sectors,
Yeah.
because we have another potential test here of the 200-day moving average line. We got turned away before, so again, for a lot of these indexes that are getting up to resistance levels, we want to see how they handle themselves. It's quite possible that again we get up to these resistance levels, pause a little bit, but it would be really nice to kind of see. We had that pause. We had that test of the 21-day moving average line here. Now it would be nice to see us break through that 200-day line on the small caps just to get a little bit more participation. We are still lacking a little bit on that overall participation. If you look at RSP, for instance, we still have, it looked great today, but we still have a little bit of extra room to go before we get to those highs. We're not quite at that stone's throw that you were talking about
Mhm.
for the other indexes. So it'd be nice to see a little bit more participation, around the board. And then
Mhm.
also, if we just want to switch over to some of the ETFs, I'm going to show some of the equal weighted ETFs. So we'll start out, instead of XLK, let's take a look at RSPT, because RSPT actually had a better day than XLK. XLK, of course, is kind of heavily weighted on, the Nvidia and the Microsoft, those big trillion-dollar companies. But the fact that RSPT was up even
Mhm.
more, it shows that there was lots of participation from the technology sector. So that's definitely an area to be looking at. You got that support right there at the 21-day moving average line. We were kind of talking about that yesterday, along with the indexes. And then one that, again, I'm always looking at, what the sector spiders are doing, and also the equal weighted, and RSPH came up on my radar, which was surprising. Now, this has been, if you look at the weekly chart, this has been kind of very ho hum. But there have been some stocks that look very different in that group. One of them being Abbott Laboratories, which was up a huge amount today, and I was like, "What was going on here?" Well, RFK Jr. Was kind of sharing some news about what he thought the potential for wearables being. You also shared with me that I guess there was some news also about prior authorizations, some stuff going. So there was certainly something happening in the healthcare. And sometimes I don't know the news until I see something happening on the chart, and then it tells me, "Oh,
Right.
go look for what happened here." So,
Exactly.
so sometimes it happens the other way.
Yes. Okay. Well, we'll have to see if we can get some momentum there in healthcare. But as you said, Abbott definitely stand out in today's session, up 3.6%, clearing sideways range going back the last couple of months here.
Yeah,
All right.
we'll call that the bonus stock.
There we go.
Right.
We love throwing in bonus stocks. Let's now go to Axon
Yeah, so
reversing
Axon,
higher today.
yeah, this was an interesting one. Whereas a lot of our stocks got their support and tests of the 21-day yesterday,
Hmm.
Axon did it today. So this remains to be seen. Hey, is this, was it late for, for some reason because it's weaker? I will say that one of the things that did disturb me about this chart was how ugly this got. And I mean, it just kind of seemed like it came out of the blue. I will say that I remember this happening because both Axon and Palantir got hit really hard in February. And that was kind of the canary in the coal mine for
Hmm.
trouble brewing. The fact that these two stocks came down so much, so quickly, and they were the leaders from breakouts. That
Right,
kind of
right at highs
right
of
at
the
highs,
market.
right, exactly. And so
Hmm.
that was right around when the market really started breaking down, and going into this bear market that we had. Short bear market, but bear market, all the
Hmm.
same, crash-like qualities. So now Axon has really come back from that, and in a strong way. It's already back at highs. This was a nice test of the 21-day moving average line, outside day, closing at the top of its range. We're right there at an 800 level, big round number. So yeah, I'm interested to see if, just like we were looking at these stocks yesterday and we're saying, okay, can they follow up today?
Right.
Well, guess what? I'm going to be looking at Axon tomorrow and say, hey, can you follow up to that big outside day and close at the highs?
Great point. We will be on watch for that. Let's now go to Shopify. And full disclosure, I do own a position. On Monday, we did get that outside day upside reversal here, but that came after a little bit of a shaky breakout not
Mhm.
all too long ago on 6/11, came down around the 21-day line, but it looks like it's trying to get its mojo back here, Justin, up 4% today.
Yeah, and so this is exactly the kind of follow-up that we'd like to see from Axon. It's not guaranteed. I mean, look, 4% doesn't happen every day in a stock, but this is exactly the kind of action you'd like to see. And I also want to just say, look, sometimes when you get a breakout that fails, and this one it did. It kind of had
Mhm.
its breakout and then probably triggered a 7%, 8% stop loss for you, unless you got in a little bit early on it. So in that case, don't be afraid to buy something back. We went through a sideways period, and that can cause a lot of breakout failures. But keep these things on your radar. And in this case, it's retaking that buy point. So I think based on yesterday's action and today's follow up, this one is certainly still one to watch. And both Axon and Shopify, I should mention, on the fundamental side, these are both double digit earnings growers, double digit revenue growth growers. So it's got the fundamental chops as well.
Mhm. Absolutely. Great week taking shape so far, already up 7.5%. Let's round things out with a look at booking, up 2.8% on the day. The leisure travel area definitely in focus. Perhaps, Justin, breathing a sigh of relief as Mideast tensions cool.
Yeah, possibly. But we've talked a little bit about some stocks that are a little bit higher on their ATRs, the average true range. And so sometimes it's nice to kind of balance that out with something that might be a little bit less volatile. And so just looking at our 21-day ATR percentage, booking is down at a 1.68. So
Wow.
compared to Axon at 2.66, and Shopify. Oh, I had Shopify, but I lost it. Shopify is up there a little bit at 3.67. So having some lower ATR stocks is sometimes a good idea to kind of just balance things out. But look, this was a strong day, especially for a low ATR stock, up almost 3%. Again, you got the upside reversal yesterday. It wasn't getting that support at the 21-day moving average line, but it still had some room above its 50-day line. And I'm glad you showed the weekly chart, because right there, support at the 10-week line, and not just support at the 10-week line, but also kind of at its previous lows. You can see that from the prior 2 weeks, and that was right on top of the base. So it was a real logical place for this to get support, and it did. Had the reversal yesterday and nice follow up today. So that's another good look. And so if you're looking for something just a little bit slower, now look, a lot of people might say, well, gosh, this is a $5,000 stock, $5,400 stock. I can only afford to buy, one share, in my portfolio. That's fine. It's not about how many shares you buy. If
Mhm.
you think this is something that's worth your attention, if it's one share, two shares, that's fine. It doesn't have to be 100. Don't feel bad about that. And if it's not something that works in your portfolio, it's also okay to pass that. You don't want to try and force round pegs into the square hole of your portfolio.
Exactly. All right. Well, another interesting day in the market. Justin, just like for some of the individual stocks, we want to see that follow up. It does look like for the NASDAQ composite, 20,000 is that magnet. Not saying that we'll necessarily get there tomorrow, but it does seem like if the momentum continues, that would definitely be in our sights at some point, maybe later this week.
Yeah, absolutely. But as much as, we're kind of talking the bull case right now, don't forget, you have to have those risk management rules in place always, no matter how good things are getting,
Mhm.
because that's what's going to save you from getting clobbered if things turn, or even recognizing when that happens. A couple other things that you can consider, depending on the speed with which you trade, taking some profits into strength when you have it. Set some profit targets, and booking some profits into strength. There's nothing wrong with that. It kind of helps keep your portfolio fresh, and you know
Mhm.
getting those gains in your portfolio compounding on each other. So that's not a bad way to go either.
Yeah, great thoughts there. And we have a lot going on tomorrow that Justin and I want to let you all know about before we leave. First, in the morning on IBD Live, Mark Minervini, market wizard and two-time US investing champion, will join us on the show. It'll be really interesting to see what he's been trading lately. It's always a fun time with Mark, and we always learn a lot. So, looking forward to getting his updated perspective on the market action and stocks that he thinks are leaders right now, setting up what he's buying. And then after the close, Justin, the podcast, 5 p.m. Eastern on Wednesday, you've got a guest who always he's a little cautious, a little pessimistic,
Right.
hard to read.
Yeah, yeah. It's hard to see where Jim Ropel stands on things, but yeah, talking about a great personality, someone who is very inspiring with his own story, but also
Mhm.
likes to inspire others. So it'll be great to hear from him and some of the stocks that he's looking at, because one of the things he's been talking about for a while here is this might be one of those opportunities to level up your lifestyle, and that's something I think we're all looking
Mhm.
for in terms of our portfolio gains.
Yeah, it'll be great to have him on the podcast. We do speak with him monthly for our monthly market report, and got to give him props for Credo Tech, ticker CRDO. He was putting that on my radar and our audience's radar on that earnings report, talking about the huge buying flowing into that stock on earnings and the triple digit growth behind it. So that one's working out pretty well. And I'm sure the two of you will have a lot of other things to discuss.
Yeah, I got Credo myself, so thanks, Jim.
Yeah,
I'll
me
be able to
too.
thank him personally tomorrow.
There you go. All right. Well, thanks, Justin. Looking forward to that podcast
Yeah,
episode.
thanks a lot.
And thanks everyone for tuning in. That is it from us for today, but we'll be back with more tomorrow morning on IBD Live, investors.com/IBD Live. For all the details on that, we will see you there starting 10 minutes before the opening bell and running through the first 90 plus minutes of trade. And then we've got you covered back here on Stock Market Today after the closing bell. And then Justin and Jim Ropel will see you at 5 p.m. Eastern for the podcast tomorrow. So looking forward to that. Thanks again, everyone. We'll see you next time.